It's a neat announcement, though. What I think it is it's a shot across the bow to say, hey, wake up, here we are, we have a lot of value. When Mobileye IPOs, there will be nothing else like that out there. It's large, it's profitable, it's professionally managed, and it's going to be a pure play on autonomous driving. And the estimates are that it'll be a $50 billion company. Intel paid $15 billion for it 5 years ago. So this is them saying, like, there is value here. There's other things, too. When we initially bought Intel, right, it was trading at 12 times earnings, and we thought the market was completely ignoring the Mobileye part. That's just one part of it. This shows us that, yeah, they were completely ignoring it. And they're also, we think, still ignoring the value of Intel's huge, enormous free cash flow generation that deserves a higher multiple than it's getting.
Okay, so I was all excited, and then you said it's a, quote, neat announcement. Now,
okay, I should have used a better word.
Investing, you know, as investing
exciting
theses go, is that really one? It's neat?
It's part of it. No, it's part of it. And frankly, when we bought Intel, Mobileye was a cog in the wheel of the investment thesis. It wasn't the bulk of it. The bulk of it was that they were generating $18 billion a year in free cash flow when trading at a very discounted multiple. Frankly, I could almost make an argument that excludes Mobileye from owning this, I could make an argument that excludes Mobileye, and I would still want to own Intel. I think that even without Mobileye, Intel can get to $6.50 a share of earnings in the next few years. If they do that, and you give them just a 15 times multiple, which is still way below their peers, and they do deserve to trade below their peers, right?
Well,
that would be higher than where they are now.
Let me ask you this, because you throw out numbers, and admittedly, I don't have these numbers in my head. Just for context sake, for our viewers, you think they can get to 650? Where are they today?
They're at about $5.
Okay.
Some people can say $5. Some, after their last earnings announcement, they guided down, rather, analysts revised down to about $4. So that's not a huge move up in earnings, given all the new chips that are coming.
Well, from $4 to $5
comes online,
from $4 to $5 up to $6.50. I mean, that's a considerable jump.
It is, but assuming they're at $5 now, let's say it goes from $5 to $6.50, and don't forget, they're going to spend $10 billion, they're going to generate $10 billion of free cash flow next year. They're spending $20 billion to build this foundry. Once that foundry comes online, it should mint cash too. So you take the $6.50, give it a 15 times multiple, that's over a $90 share price. But there's a lot of wait and see. We all know that this to me, it's like AT&T and Intel have the most emotion in them of any stocks that I know of. And there's a lot, so that emotion needs to suss its way out. People need to get used to it, and they need to believe in Pat Gelsinger and believe that he can execute and operate.
Okay.
That's going to take some time. And that's why I'm enthusiastic about this, but I'm not like, rah, 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 this is what I've been waiting for. This is just a step in the ladder.
The comment from Jim Cramer in the CNBC Investing Club, I want to read it to you. Intel can't do it with earnings, so they do it with a breakup? Now, how do you respond to something like that? It doesn't sound, I don't know. Do you necessarily disagree with that?
Yeah, I do. And if you look at their earnings, they've actually beat the last several quarters. They beat by 54% last quarter, 20% the previous 2 quarters, 38% the last quarter. But then the stock traded down after last quarter, not because earnings were great, they were, but because they then guided for 22, where margins would be compressed a bit, because they'd be investing in new chips, in new products. And so there's like a year of compression, a couple years of compression, and then they explode. So I think that they will do it with earnings.
Okay.
But your time frame needs to be long, right? And I was early. I joke when you say you're early, you're wrong. I've been wrong, right? I should have gotten in now, not a year and change ago. But I think you always need to look forward. And you say it all the time, Scott. You say you need to go where the puck's going, right? I think the puck is going in their direction now. But it's not going to be a shoot the lights out. This is going to be patient and early.
Okay.
It reminds me of when I bought Qualcomm. Yeah.
All right, Jenny. I appreciate it. Thank you. We'll see you soon.